Well, hello and welcome to Financial Management. So this week we're going to talk about more accounting things, okay? And what we're going to talk about is basically what starts with a balance sheet, right? The balance sheet is basically an account, a picture of just exactly what a business owns or you own at any one time, okay? And that's mainly project number 3. And then project 4 is going to be, again, more actual accounting things. And we'll talk about project sheet, balance sheet, sorry, ledgers, and journals. Okay. And so they get into the real meat of accounting things. Remember, this Thursday afternoon and Friday is student learning conferences, so I will not be online to answer your messages or to mark your work. Okay, so if we go into content, right, we'll see that you should be on project 3, 1015, project 3 right now. And the heading of that is financial statements, okay? And part 1 of this is called the balance sheet. And the balance sheet is just really, again, a way of looking at what your assets are, what you own, and what your debts, what your liabilities are, what you owe other people. Okay. So I encourage you to go through the D2L website and watch all the videos that are embedded. There are a lot of embedded videos that were embedded by a previous teacher, Mr. McNeil, and he took screenshots or screen videos of all the important topics, and then he posted them all on D2L for us. Okay, so I'm not going to play the video for you, but at the end of the day, you should have your own balance sheet. And I'm going to go over this link here that I found from BDC, Business Development Bank of Canada. And in the most balance sheets, you'll find that the assets and the liabilities are listed vertically, right? One on top of the other. In our balance sheet, we're going to list ours side by side, left to right. But no matter what or how the balance sheet is presented, vertically or horizontally, you need to make sure the assets equal the liability and equity, okay? So for instance, in this example, there is $120,000 in current assets, and then fixed assets is $180,000 for a total assets of $300,000. All right, so that's an asset of that business. And then if you look at the liabilities, what it owes to other people, 70,000, plus shareholders' equities, how much money the owners have in the program. It's 100,000. I also forgot long-term liabilities, so debt in the bank, that equals to 300,000. So 300,000 is the debt, sorry, the liability plus equity, as well as the assets. All right. So often it's not determined for you directly what the shareholder equity is. So then you need to do some math. All right. So this is the key in all accounting, in the balance sheet of accounting. Total assets equals total liabilities plus shareholder equity. Okay, so keep that in mind. And if we translate that to personal finances, right? This is what's called net worth. Your equity is your net worth. So if you were to look at all your assets, your money in your bank account, the phone that you own, the computer that you own, things like that, the clothes that you own, subtract out any liabilities, any money you owe to your siblings or to your parents, then you have your net worth. Okay, so net worth is the same as equity in terms of accounting for businesses. All right, so that's pretty much all of project 3, calculating your net worth. All right, any questions and comments on project 3? Okay, all right, let's move on to project 4. All right, and project 4 is starting a business, and you're going to be the accountant for this business. What you need to do is you need to go through these pages one by one, right? In financial management, it will also always have a format of here's an example, and we're going to work through the business of Gurpreet snow removal, and then it will show you what is expected for that topic. So in this instance, the beginning balance sheet. So go through the pages one by one. And the first part, which is usually on page 2, is telling you the case study. And as I said, this is for Gurpreet's snow removal. And this is owned by Gurpreet Singh. So the owner's name is Gurpreet Singh, and his business is snow removal. All right. And here is a balance sheet. And it's given to you already. It's an example. We're learning through examples here. A balance sheet should have the owner's name, and then the word balance sheet, and then today's date. On the left-hand side are all the assets of Gurpreet's snow removal. So actually, this is his own personal balance sheet, sorry. So he has cash, music, jewelry, clothes, and electronics. And then George owes him some money. So it's what's called considered accounts receivable, right? Accounts receivable is it's considered an asset because someone has to pay you that amount. For his liability, though, he owns his parents and his relative, Julian mom, $110. He owns a bank $100. So his total liability is $210. So then if you take assets, $3,650 minus $210, his net worth, his equity is the 3650 minus 210, or 3,440. And then for the liability, total liability plus total equity is 3650. And here is the key part, right? Total assets, 3650, is equal to total liability and equity, 3650. Okay. And then here is again another video that goes through how you can create a balance sheet in Microsoft Excel. Now, often you'll see this template for you in D2L, and you can really use that to your advantage because it comes with all those lines that you don't need to recreate. Okay. And there are also videos on how to work in Excel as well, how to format numbers, changing data formats, or using formulas for Excel for it to do the math for you. So that was page 2. Page 3 now is often a what's called time to practice. You have some information here where you practice. Okay, so in this case, practice 1. You open the balance sheet, and then this is for Dr. Simmons, and then your formatting should be correct. And here's some example for you. All right, so let's work through those examples together. So I have here the balance sheet. Gonna rearrange my screen here. Okay, and this is for Zimmerman Medical Clinic, right? So we can say Zimmerman Medical Clinic. We'll just copy and paste here, because it's just that easier. Never mind, can't paste. So we'll just type in Zimmerman Medical Clinic. And this is a balance sheet. And today is March 10th, 2025. We have assets on the left. His first assets is cash in the bank, $9,000. cash, 9,000. And then money due from patients, so it's account receivable, right? We can abbreviate AR as account receivable from patients, and it is $6,000. Money due from Alberta Health, so AR Alberta Health, and that is $14,000. Supplies, $2,000. And equipment, $140,000. Okay, so we'll go down a few rows, and we can say total. Okay, and here is the beauty of Excel. You can use formulas. So in the cell, we're going to type the sum, which means to add everything above here. So everything above here, and I know we don't have every numbers below there here, but we're going to include it just in case we need to add more numbers later on. So his total assets is $171,000. Okay, all right. Now, on the other side, liabilities. And let's see, money owing to proceed suppliers. So accounts payable, okay? Accounts payable, speed suppliers. He owes them 11,000. Money owing to Dave's janitorial. Accounts payable, Dave janitorial. How much is that? $2,000. And then bank loan, $7,000, right? So now we can say total liabilities. So again, equals the sum of everything above it. So we can just drag and select, hit enter, $20,000. Okay? So now remember, we still need to calculate equity, right? Owner equity. And this should be centered, so we'll try to center it. And then we can say Zimmerman owner equity. And we need to calculate, right? So how can we calculate it? Well, you can just use our calculator feature in our computer, because we know we have assets of 171,000 minus total liability of 20,000 minus 20,000. So it's 151,000. 151,000. Okay. And now we can say at the bottom, total liability and equity is, now we're not going to use sum this time because we just need to add two numbers. We just take this number plus this cell, not number, and then boom. And then we have numbers that match. And remember, for accounting, when numbers match, we do what's called double rule. Now, in Excel, again, we have double rule. Where is the double rule? Top, bottom, double, there we go, right? That shows us that the left side, assets, balances to the right side, liabilities and equity, okay? So that is our balance sheet, right? And once you do that, you can click on this link and it will download the file for you, and you can check whether your work, right, the work we did here, matches the work that you should get. Okay? So that's training room 1, balance sheet. Questions on that? Okay, no questions. All right, let's move on. Training room 2, chart of accounts. So what is a chart of account? Well, you can tell this is the beginning of what's called the ledger. And the ledger is really what people think of when they think of accounting. It's all those little accounts with numbers on them. Okay, so a chart of account is can be also called a table of contents. It's a chart, a guide of all the different accounts that you have in your business. And here are the key rule for the chart of accounts, okay? Now it says, recall that a balance sheet is divided into assets, liabilities, and owner's equity. All assets begin with the number 1. So you could have 2-digit account numbers, so 10, 11, 12, 13, right? But then you're limited to 10 accounts number because your numbers 2 are all liabilities, and number 3 are all the owner's equity, okay? So ideally, you have 3-digit account numbers or sometimes in 4-digit account numbers. So those are 1, 2s, and 3s. And then later on, we'll talk about temporary accounts such as capital account and drawing accounts. When we get there, right, the revenue accounts will have a number 4, and expense accounts will start with number 5. Okay. So we can look at the video again, and this again talks about Gurpreet's snow removal and his chart of accounts. All right. Now, on page 3 of training room 2, you have now time to do some practice. Okay, and so we'll do practice number 2 actually because the information is on this screen. All right, let's bring up the template. Okay, you can click on this link and get the template for the chart of accounts. And here it is. All right, and again, we're going to need to title this. This is the chart of account for Clearview window cleaners. Clearview window cleaners. Chart of accounts. So 1000 is the asset. So we're going to have 4-digit accounting system. All right. Cash. So this is going to be 1001 cash. 1002, it is going to be accounts receivable. D. Thurston, that's the person who owns this money. 1003, accounts receivable, Triad Cafe. And then 1004, AR Harry's Eatery. And 1005, equipment. What else? Truck. Truck. All right, the truck is the equipment. Okay. Okay. What about liabilities? Okay. Liabilities should have all account numbers starting with 2. So 2000. Liabilities. And let's change the alignment and we'll make it bold as well. All right. So 2001 is bank loan. 2002 is account payable to A1 Rentals. And then 2003, why is that bold? Where are we here? Right, AP is super supplies. AP super supplies. All right, and then 3000 is equity, and 3001 would be, whoops, the owner's capital, and this is owned by Emil Jolini. Emil Jolini capital. And 3002 is Emil Jolini drawing, and we'll explain what drawing is, or we'll come across what drawing is in a minute. Drawing means the owner temporarily borrows money from the business. And 3003 is, what is that? Income summary. Income summary. Okay. Let's change that to a bold, and we'll align that to the left, and we'll unbold that one and center align. All right. And then revenue. So that now in the 4,000s, 4,000 revenue. 4,001. Actually, we'll do that. $4,001 is vending machine sales, and 4,002 would be service fees. Okay, and then 5,000 is expenses. 5,001 would be, what is that? Rent expense. 5,002 would be truck expense, and 5,003 would be utilities expense. Okay. All right. So that is our chart of account. And we could go click on here and see what their answer is and compare our results to the answers. All right. And then that's the practice page. But what you actually need to do is submit the work on page 4, time to work, right? For all the time to practice, you don't actually need to hand in. You do need to hand in the time to work, all right? And again, there's a template for you to use. And then here is the balance sheet that you can start from, right? So in your instance, in this instance, there are cash, account receivable, office machine, golf equipment, and maintenance equipment. So there are 5 accounts. So you should have 1,001, 1,002, 1,003, 1,004, 1,005. Okay? So that's training room 2 for project 4. Questions and comments? Okay, next we have what is called posting, or the opening entry. Okay, and what the opening entry means is that we're going to take all the information from our balance sheet and then put it into what is called the general journal. All right, and in this general journal is really the day-to-day business, the day-to-day transaction of a business. And it has debit and credit columns. In accounting, the debits should always match the numbers or the sum in credits. Okay, and to do this, we have to make sure that the assets, things that we own, are put in the debit column, whereas the credits are for liability and owner's equity. As well, the general journal record financial events, so sales, expenses, in chronological order, so by order of date. And you can read the information and you can look at Gurpreet's example again, all right? And once again, I stress the importance of what's called debits equal to credits. All the debits have to equal to all the credits for one in a single entry, right? And here we have a video of Gurpreet's opening entry. So on the next page, of course, will be time to practice, right? And for time to practice, we can again open we can look at Dr. Zimmerman's medical clinic. And we're going to use the balance sheet that we created, as well as what's called now the general ledger template. The general ledger template looks like this. And I'm going to bring back up that balance sheet. Do we have a balance? Yeah, we do. We have a balance sheet for Dr. Zimmerman's clinic. Okay. And so we're going to complete an opening entry on page 1 of the general journal, and we use the balance sheet with our current year. Okay. So here we go. We're going to do this side by side. So we don't need to put in the dates, we don't name of this because it is just the general ledger. I don't need the general ledger. I need the journal template. Never mind. Let's try that again. This is the journal template. I'm one step ahead of myself here. All right. Open that. This over. Bring this over. Where's my balance sheet? There's my balance sheet. And here is my journal. Okay, so date. It is the year 2025. It is March 10th. Okay, and now we're going to put in cash. What was the cash amount? It is $9,000. You know what? Let's do some copying and pasting. Okay. And then we'll copy these amounts as well. Now, this post reference column, we're going to leave blank for now. This will be for our next step. All right. And then for liabilities, we have these things. We're going to copy that and we're going to paste it into here. But here, because we have these are liabilities, we're going to indent them a little bit. All right. And we're going to indent them by, where is that? That feature that I'm looking for. Oh, this is what's indented, what search is for. And increase indent. Boom, done. Okay, easy. You don't need to put in spaces, okay? You can just ask Excel to do the things that you want. Now, remember, these are liabilities, so this should be on the credit column. And then lastly, we have Zimmerman equity. Again, increase indent. This is that much. Okay? And then one final thing that we need to put in is the source. Where do we get this information from? Right? Now, later on, we'll talk about receipts and invoice. But right now, this is from the balance sheet. So you can just say balance sheet. That's a source document, okay? And we'll get to source document a little bit later next week. And that's it. You have here the opening entry in the general journal for Zimmerman's medical clinic. And that is training room 4. So after you do some practice and make sure that your work is correct and matches the answers, you can now do the actual assignment for Southwood Animal Clinic. And then once you've done that, you can put it into the assignment folder. Okay? All right. Questions and comments on that one? Okay, nothing? All right. So the last training room in Project 4, it's called posting the opening entry. And that means to take the information from our general journal and put it into a ledger. So in the first page here, you can click through to see what is a ledger, all right? And then here we have the example of Gurpreet's snow removal. And it goes, this I think is a 5-minute video, no, a 3-minute video. And it goes through the posting of his general journal into his ledger, okay? Now on page 3, right, we have the Zimmerman Medical Clinic again. And we're gonna open the practice journal. We'll just save that one and open it and open it. There it is. That is our practice journal. As well, we have our practice ledger. Okay, so here is our practice ledger, which is really similar to what we just did because it's correct. And then we're gonna post it into this account, this ledger, sorry. This is our, what's called our ledger, all right? And this has already been what's called opened for us because the ledger has the title of each account as well as the account number. And if we didn't have that, we would need to go back to our chart of accounts, right? That's why we have, where is that chart of accounts? We have this. So I know this is for a different business, but imagine if this was for Dr. Zimmerman's clinic, right? Account 1001, right? Account number 1001, the name is cash. And then account, well, this one is 1005 because he skipped a few numbers. It's account receivable. But if we had used it for our Clearview window cleaner, we would put account number 1002 in account number and account receivable for, well, account receivable. But that's not what we have. So we'll just do this for our general journal and put it into our ledger. Okay, so the date is again 2025. It is, well, this was in January. Okay, let's do January 28th. And the item, we don't need to put in any item because this is just from our general journal. And it is a debit entry of, whoops, sorry, don't do that. It is just a balance because we're opening our journal of $9,000. And then for this column, it is either a debit amount if it's an asset or a credit amount if it's a liability or an equity. And since cash is an asset, this is going to be a debit amount. Now, the rest of these columns, debit and credit, we're going to leave blank for now. We're going to use those when Dr. Zimmer's clinic has actual business. All right, this is just what's called opening the ledger, opening the accounts. Okay. Okay. Second one, account receivable for patients is $6,000. So we're going to go 2025, January 28th, and it has a balance of $6,000. Because it's an asset, we're going to put in debit. Okay. And then we would continue to do the same for Alberta Health, supplies, and equipment. All right, we'll skip that for now. I'm sure you know how to do it. The next part is the liabilities, account payable proceed suppliers. So this would be this account payable 2001, proceed supplier, and we got to this part through this tab, right? There are different tabs. The first tab is in assets. The second tab is liabilities. So for liabilities, the first one is account payable, proceed, suppliers. So again, we're in 2025, January 28th, and the number here is 11,000. Now, this is a credit balance because it's a liability. All right, so keep that in mind. And then Dave's janitorial, we'll need to put in a new one because it's not there. So we'll say Dave's janitorial. And the balance is $2,000. As we said, this is a credit because it's a liability. And then bank loan is $7,000, also a credit, and also on January 28th. All right. And then lastly, for Zimmerman Capital, we go into our third tab here, owner's equity. This is obviously the wrong template. Sorry about that. So it's not Joseph Yuen, it is Dr. Zimmerman. And the date is January 28th. It's at 28th. And it has a credit balance because it's owner's equity. And it is $151,000. Okay, so that's the end of training room 5 in project 4. If you have any questions on if it's a credit or a debit or which account it should go into, please send me a private discussion message.